Yeah, well, we think Bitcoin is the highest form of property. It's the apex property in the world, and it's the best investment asset. So the end game is to acquire more Bitcoin. Whoever gets the most Bitcoin wins.
Wait a minute, everyone. Welcome to Bitcoin Zella, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. Bitcoin Zella offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with Bitcoin Zella. Subscribe now. Bitcoin prices have hit new highs in 2024 thanks, in part, to the launch of Spot Bitcoin ETF. It's not a surprise to MicroStrategy Executive Chairman Michael Saylor, a longtime Bitcoin bull, who calls the cryptocurrency the best investment asset. MicroStrategy recently increased its Bitcoin holdings by 12,000, which Saylor says the company will continue doing. When asked if MicroStrategy will use some of its Bitcoin holdings to return money to shareholders or make an acquisition, Saylor was clear. "We believe that the best use of capital is to buy Bitcoin and hold the Bitcoin," adding that Bitcoin is the winner compared to other assets. Overall, Saylor says the use case of Bitcoin is capital preservation. Saylor compares investing in Bitcoin to buying a home in a city everyone wants to move to, saying Bitcoin is the apex property of the human race. So without wasting any time, let's dive into the video.
Well, let's keep in mind the fundamental principle. What's the use case of Bitcoin? It's capital preservation. So if you have $1 billion and you live in South America, or you live in Asia, or you live in Africa, and you want the capital to last for 100 years, you're not going to want to buy $1 billion company or $1 billion building or $1 billion of land in any place in Africa. You're going to have to find some other form of property that you can hold for a long period of time. Let's take New York City. Developers of New York City in 1776 didn't have an end game. They've been raising capital to invest in New York City real estate at the all-time high for 300 years. If you went and talked to them today and you said, "What's your end game?" they would say, "Well, we're going to keep investing in New York City." If you've ever talked to a person that owned an apartment in New York City, no one aspires to hold the apartment for a few years, sell the apartment, and move out of New York City. They put it in their will, they give it to their children, and if you ask them why, they say there's no better place on earth to live than New York. There is no place up from there. So New York City is the end game for people that want to live in the greatest city in North America. Bitcoin is the end game for anybody that wants to own the greatest property in the 21st century. People that use fiat currency as a store of value, there's a name for them. We call them poor, okay? Anybody that's rich in the world, they own property. They own large swathes of land. The royal family of England, it didn't sell all of its property in central London in order to buy, currency or paper money. Nor did the royal family of Japan. Nor did the royal family in the Middle East. In fact, they want to own the property forever. I want you to imagine Bitcoin is. It's a city in cyberspace that's 276 blocks wide, 276 blocks high, 276 blocks deep, about 21 million blocks. Now imagine all 8 billion people in the world want to live there one day. They want to put their capital there. There's $900 trillion of wealth in the world. As people migrate from every other form of property and they've assets into cyberspace, you're going to see the Bitcoin network go from $1 trillion network to a 10x that to 100x that, and there really is nowhere else to go. It is the apex property of the human race.
Over the past week, Bitcoin has surged by 8.08%, marking a 50.42% increase in the last month and an impressive 250% growth over the past year. Bitcoin has surpassed its previous all-time high, rising by 1% in the past 24 hours. Currently, it trades near $73,000. The catalyst behind this surge is the U.S. Securities and Exchange Commission's (SEC) approval of Spot Bitcoin ETF. These instruments allow investors to buy into Bitcoin without the complexities of direct crypto ownership, with each ETF share backed by real Bitcoin. This mechanism directly impacts Bitcoin's supply and demand, pushing prices upwards as each share purchase translates to actual Bitcoin being bought in the market. Bitcoin ETF have been purchasing an average of 10,000 Bitcoin daily, vastly exceeding the daily mining output of just 900 Bitcoin. This results in a demand that exceeds supply by over 10 times. The total assets under management for the top 10 Bitcoin ETF have skyrocketed to around $50 billion, with BlackRock's Bitcoin ETF at the forefront, accumulating $10 billion in assets, followed by Fidelity's ETF, which holds $6 billion in assets. The slow but steady adoption of spot Bitcoin ETF by traditional financial institutions suggests a burgeoning stream of capital flowing into Bitcoin. This process, albeit gradual, is expected to maintain a steady demand for Bitcoin. Moreover, the passive investment strategies employed by these institutions, which automatically allocate funds to certain assets, are likely to include Bitcoin ETF, further amplifying the demand. Analysts expect pension fund managers would inevitably succumb to lure of the ETF.
We believe that the highest, best use of capital is to buy Bitcoin and hold the Bitcoin. The Bitcoin is going to appreciate in value faster than the S&P index. It's going to appreciate in value faster than commercial real estate. And so there's no point in selling the winner to buy the losers. And Bitcoin is the winner. And so we're just going to keep acquiring Bitcoin with our cash flows, with equity or capital raises, any other accretive method that comes to mind. Right now, an institutional investor that wants to buy Bitcoin has a choice of investing in the ETFs, of which BlackRock and Fidelity are very well known, or investing in some other company that has a Bitcoin strategy like MicroStrategy. You could think of the ETFs like ocean-going container ships. They can carry huge amounts of capital. You can invest $1 billion a day in the BlackRock ETF, so they could take on hundreds of billions of dollars of capital. They're not going to trade at a premium, but what they don't have is performance and leverage. MicroStrategy is different because our capital you can't redeem our shares, so it's possible for our shares to trade at a premium. We're an operating company, and that means when our shares trade at a premium, we can either raise capital through convertible debt or through equity. When we do that, we're doing it at a premium to the underlying assets. That captures an accretion for our underlying shareholders. So following a debt deal where we swap the debt for Bitcoin, our common stock shareholders have more Bitcoin per share than they did before the deal. So another way to say that is, if you want to pay 25 basis points and be 1-to-1 levered, then you would buy the ETF. But if you actually want to generate an accretion or a yield and not pay the fee and have leverage, then you would buy a stock like MicroStrategy. You could think of us as we're like air freight. We're Federal Express. We can take you faster, but we're never going to carry the same amount of capital in our payload as a supertanker or a container ship. So there's place for both of those strategies. And in fact, they're very complementary. I think the ETFs benefit from the existence of companies like MicroStrategy, and MicroStrategy benefits from the existence of the ETFs. Well, you can see, if you look at our past, there have been periods during the crypto winter when Bitcoin went from 66,000 all the way down to 16,000. In that case, we simply hold the Bitcoin. Instead of being 20% levered, we become 40% or 60% levered. The way that we raise the capital is using convertible debt, and so the convertible debt is a unsecured instrument. It's not marked to market. It doesn't come due except in 4, 5, or 6 years from the point that we issued it, and it's not secured against any other kind of capital. So we don't have to actually do anything. We just wait for the market to recover, and that's what we did in 22, and in 23 we recovered, and our shareholders benefited from the deleveraging as Bitcoin rallied in the other direction.
The current crypto market cycle is characterized by unique features, including unprecedented institutional involvement and evolving regulatory landscapes. This has resulted in Bitcoin hitting all-time highs before halving. In all previous market cycles, the all-time highs happened after the halving. These elements differentiated from previous cycles and are crucial in understanding Bitcoin's price dynamics and the potential pathways the market could take, with Jerome Powell signaling reduced rates later in the year, leading to a rally in the markets. The market is navigating through uncharted territory, with Bitcoin's price rally being driven by a combination of institutional interest, regulatory developments, global liquidity, and the actions of market whales. The continued influx of institutional capital, the constrained supply of Bitcoin, and the evolving interest from retail and crypto whales paint a complex picture of the market's future trajectory. As we look to the future, it's clear that the crypto market is in a state of flux, with various forces at play that could influence the direction of Bitcoin and altcoins. Staying informed and adaptable will be crucial for those looking to navigate this volatile yet potentially rewarding landscape. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.